Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's Matthew Kidman, and today we're going to review the profit reporting season, the best and some of the worst. And to talk about it, we've got Blake Henricks from Firetrail and Michelle Lopez from Aberdeen. Michelle, let's start with you. Treasury Wines. Thought it was all over. China said no more wine from Australia, but it's done pretty well. The result was quite good. Buy, hold or sell?
It has done well, so it's a hold. It's a hold for us, and to give credit where credit's due, they have done a phenomenal job in pivoting their sales from China into other parts of the market, particularly with that Penfolds brand. The issue that we see from here is that margins are going to stabilise, but they're going to stabilise lower. And they're facing some pretty significant cost increases. Yes, we've got the ones of supply chain, which is affecting everyone, but they've also got fires and droughts that they've been battling. And then when you look at the valuation, we just don't think that there's much upside from here. It's trading about at a 15% discount to its long-term forward PE. So it's a hold.
Treasury was one of those ones, Blake, that not a lot of great expectations for it. Came out a bit better, bang, up, I can't remember, 10% on day one. Buy, hold or sell?
Plus. It's a hold as well. I mean, I've never been so wrong about something in my life. Like when they lost China, I just thought, we'll come back in 5 years and maybe we'll mend fences and they can get it. But they've actually reallocated 50% of those China sales back into other parts of Asia. They think in the next 2 years they'll have reallocated 100%. So management have done an amazing job to do that. I think the question is still going to be about the sustainability. So you've got to do your work and work out how sustainable you think that's going to be.
Trading platforms, Premium, Net Wealth, terrible. Hub comes out last, shoots the lights out. Buy, hold or sell?
I mean, they're just killing it. They're taking so much market share. It's a hold for me. I'm getting a lot of people telling me I should buy it for rate leverage. But the thing I think people forget is, yes, they'll make more on their cash balances, but what about the 45 times PE? Those things don't go in the same bucket. So for me, it's a hold.
It was a terrific result given the other two. And it came out, and it held its margins. The other two struggled. Buy, hold or sell? Hub 24.
We're still buying this one. I think it's one of those stocks that have really got a lot of momentum, particularly behind the inflow of FUM or FUA that's coming through. Yes, it is on a high multiple, but it's also growing at 30% consistently, and we can see that carrying on for the next, at least for the next 3, 4, 5 years. The other interesting thing is they have been incredibly strategic in their acquisitions. So they've done one recently in the non-custody space and in the self-managed super fund, and they're well ahead of peers here. And we think that's setting them up really nicely for that future growth profile. So it's a buy.
Okay, let's go to alcohol. Debut as a listed company, Endeavour spun out of Woolworths. Buy, hold or sell?
It's a buy, even though it did pop 10% on the day. So it was a very strong result, and the result was driven very much by the retail part of the business. So they have the Dan Murphy's and the BWS stores as an example. And there was permanency in the margin improvement, we felt. So there's premiumisation happening within the portfolio, but they're also penetrating their own brand. So that's done really well for them. But the next part of this story is where we're looking to now for the future, which is the hotels. So they own the largest portfolio of hotels and pubs in Australia. And we think with the reopening dynamic happening now, and mobility and people getting back to some kind of normalcy as we are today, they're going to benefit from that. And that part of the business has 3 times the margin that the retail does. So it's a buy.
Like normally with these spin-outs, it takes a little while for them to get a bit of momentum, but at Endeavour, they were popping the champagne corks straight out of the gate. Buy, hold or sell?
Yeah, for me, it's a sell. It's a cracking result, and they've done so much better in the hotels business, in trade, and I do agree with Michelle, they are hedged in terms of their reopening versus stay at home. For me, we've got much better options, we think, in the reopening trade, and there's also better options on the defensive trade. So it's sort of a bit of a hybrid. I've got to sell it so I can buy some other stuff that I really like.
Okay, well, hold that thought for a bit. Let's go out on a low note. What was one stock that did really badly in reporting season? You thought, well, I don't need to go there.
Well, I don't want to kick them while they're down, but Zip, I've just had a look at the result, and one really interesting thing caught my eye, and that was bad debts. So, typically, or a year ago, bad debts were running at 1%. They've jumped up to 2.6%. And if you look at the slides, they're saying lack of, I guess, US stimulus and cash handouts are starting to impact bad debts. So we don't own it, but if I did own it, I'd be wanting to understand a lot about what that trajectory is, because when we look at US cards, like the Amexes of the world and the charge-off rates, Zip are bucking a downward trend. So, let's work out what's going on there.
Zippy name, but not zippy share price at the moment. Michelle, have you got something that can even do worse than Blake's Zip?
I don't know if it'll do worse, but the one sell for us, and again, this was a stock and it's Appen. We were looking at Appen, we don't own it, we haven't owned it for almost 18 months, but it was reaching a very attractive valuation level. So it's now on 15 times, it's profitable, it's got cash on the balance sheet, but the result really reiterated it remains a sell. And a couple of things came through. Firstly, the visibility. So management are trying to provide more visibility, yet they move away from providing revenue numbers and they provide this aspirational FY26 target. Doesn't help in this environment. Then you've got the custom concentration risk that they have within their books. And to me, when I look at that multiple, it looks attractive, but in fact, it's a reflection of the quality deteriorated in that earnings base. So it remains a sell at this point.
So it was a tough reporting season. There was good and bad, but all three of us got through it somehow. Give it a thumbs up. It was a great show. And if you want to see it again, why don't you sign up to the Livewire Markets channel on YouTube?